Welcome to the Deep Dive. Today we're digging into the latest buzz in crypto and blockchain. We've got some source audio we'll be breaking down to see what these shifts really mean for you.
Exactly. We're cutting through the noise. We'll hit the FOMC meeting aftermath, market reactions, what's happening in DeFi and stablecoins.
The Ethereum upgrade, Tether's tokenization moves.
Yep, Revolut and Lightning Network, plus some really interesting Web3 and AI stuff coming out of the Middle East, basically giving you the key insights.
Okay, let's jump in. The FOMC meeting, Federal Open Market Committee, that was yesterday, May 7th. Big news. Interest rates held steady.
Right. And our source mentioned, a small bump in Bitcoin and crypto prices right after. Just marginal, though.
But what's interesting is the caution, right, about how mainstream media might spin it.
Yeah, the speaker brought up that 2023 example with Powell and recession talk, how it maybe wasn't portrayed entirely accurately in their view.
It just shows, doesn't it? Narrative is huge in crypto, sometimes more than the actual facts.
Absolutely. Price action follows the story. It's not always purely logical.
And the point was made that steady rates aren't necessarily a bad sign for the market anyway.
No, not at all. It just shows you need to, be aware of the framing, not just the event itself. Sentiment is key.
So zooming out a bit, market health. Global crypto market cap was knocking on the door of $3 trillion. Yesterday, May 8th.
Yeah, could cross it soon. Seems like the FOMC outcome, like we just discussed, might be fueling some of that.
It's always those macro things, isn't it? CPI data, FOMC meetings, they really move the needle.
Definitely triggers. And the mood seems pretty upbeat overall.
Yeah, fear and greed index at 67. That's greed territory. Plus, a big jump in 24-hour volume, up over 39%.
Wow, $92.28 billion in volume. That's a lot of activity. Suggests some renewed confidence after the Fed meeting.
Okay, let's talk DeFi, decentralized finance. Source pointed out a big increase in DeFi trading volume.
Over 15% of the total crypto market's 24-hour volume now. That's pretty significant.
But the total value locked, the TVL, is still under $100 billion. What's the takeaway there?
Well, it suggests maybe more short-term trading, speculation, rather than people locking up capital long-term in these protocols. Volume's up, but the money parked isn't rising at the same pace.
Interesting distinction. And for anyone wanting to dig deeper, diffalama.com was mentioned.
Good resource, yeah. And Uniswap's still the king of the DIXs, volume-wise.
Followed by PancakeSwap and Radium. That hierarchy seems pretty stable for now.
For now, yes. Always worth watching for challengers, though.
Okay, shifting to stablecoins. Their volume was massive, over 91% of the total crypto market volume in 24 hours.
Just huge. Shows how vital they are for, moving between fiat and crypto, providing that stable bridge.
And Tether. Their profit report for this year so far. A big drop compared to Q1 2024.
Yeah, like $1 billion versus over $4 billion. That's quite a difference.
Makes you wonder, right? Even with high volume, are costs up?
Yeah.
Revenue stream shifting?
Could be. And they're also branching out, aren't they, into AI, even agricultural stuff linked to AI. Diversifying.
We also saw the 24-hour volumes for USDC, around $7.9 billion, and FDUSD at $2.3 billion.
Gives you a sense of the landscape. Tether's still way out in front, but others are definitely in the mix.
All right, the big players. Bitcoin market cap, $1.91 trillion. Getting really close to that $2 trillion mark.
And volume nearly $78 billion. Ethereum also strong, over $50 billion in 24-hour volume.
Let's talk dominance. Bitcoin's over 64%, Ethereum around 7%. What does that dominance figure actually tell us?
It's basically Bitcoin's slice of the total crypto market pie. When it's high or rising, now, it often means Bitcoin is leading the market moves, pulling things up or down.
Got it. Then the source brought up RWA tokenization real-world assets, especially after Larry Fink's comments.
Yeah, turning things like gold, real estate into digital tokens on the blockchain, making them easier to trade, more accessible.
Top RWA tokens mentioned: Chainlink, Avalanche, Stellar, Hedera, XDC network.
And Chainlink's CIP protocol got a specific shout-out. That's their cross-chain interoperability protocol.
Crucial for making different blockchains talk to each other, right?
Yeah.
For tokenization, privacy.
Exactly. Really important infrastructure for this whole RWA thing to work smoothly.
We also got some price snapshots from yesterday. Bitcoin around $97,015.
Ethereum about $1,830. XRP $2.13. Slight gains for Bitcoin and Ether over the week. XRP down a bit.
Just snapshots, though. Like you said, it's the underlying stuff, the sentiment, that drives the longer trends.
Speaking of underlying stuff, Ethereum had that upgrade. Pectra went off without a hitch, apparently.
Aimed at faster, cheaper transactions for users, better tools for devs, more security. Sounds good on paper.
Yeah, improving the core functionality, scalability, trying to tackle these key blockchain challenges, long-term improvement.
But, like the source noted, didn't really move the needle much on price or market cap immediately.
No, not yet. But then there was that other Ethereum news. Kind of concerning.
Ah, right. The New York Attorney General asking the SEC back in 2023 to classify Ether as a security, revealed via a FOIA request by Coinbase.
That throws a major question mark over regulation in the U.S., doesn't it? If ETH gets labeled a security.
Wow. Big implications for trading, exchanges, everything. Could ripple out to other coins, too.
Definitely something to watch. Okay, what about Tether's new thing, Hadron, their tokenization platform?
Yeah, this looks like a big step for them, really boosting their asset tokenization game.
And the key seems to be compliance, integrating institutional-level tools, partnering with Elliptic.
Real-time monitoring, risk detection, KYT, know your transaction, like background checks for crypto.
Built right in. It sounds like it's aimed squarely at institutions, corporations, governments even.
Letting them tokenize bonds, commodities, stablecoins across different blockchains.
Tether CEO Arduino said they want to set a new standard for compliant tokenization, and Elliptic's guy stressed trust and transparency.
Which is what institutions need, right?
Absolutely. And Tether has been working on compliance, freezing illicit funds, and so on. Hadron seems to build on that.
Continuous monitoring, KYT built in, easy API connections. Sounds like they're ticking the boxes for big money.
Essential features if you want to attract those players. They need robust compliance and easy integration.
Okay, changing tack again. Revolut, popular finance app. They've launched Bitcoin Lightning payments.
In the UK and in some EEA countries, yeah. Partnering with Lightspark.
This is about making Bitcoin usable for small, fast payments, isn't it? Using that Lightning Network layer.
Exactly. Faster, cheaper transactions.
Yeah.
Addresses Bitcoin's scaling issues for everyday use.
Revolut's manager talked about affordable, real-time finance. And Lightspark's David Marcus, remember him from Libra, praised it as embracing open money.
Yeah, the Bitcoin maximalists, the real diehards, they see Lightning as a massive innovation.
But it's not simple to implement, is it? The source mentioned Marcus himself and CZ from Binance acknowledging challenges.
No, it's still evolving, like the early internet, maybe. Huge potential, but still needs work on the user side.
And you've got folks from Bitcoin Cash and BSV criticizing it, pushing their own scaling ideas. Shows the debate's still ongoing.
Always different approaches being tried. Okay, let's head to the Middle East. Some cool stuff happening there.
First, Omnic Brands, opening an office in Dubai, focusing on Web3.
Signals that growing demand for Web3 expertise in the region. Dubai's really becoming a hub.
They brought in Nomar Al-Azal to lead. He's got experience with Polkadot, Ripple. Seems well connected.
Yeah, background suggests a focus on strategic growth, partnerships. Makes sense for entering that market.
Their focus is digital property rights, the open metaverse, blockchain adoption, fits the Web3 trends.
Definitely. And then there's Saudi Arabia. Huge AI initiative.
Sammy, right. Training 1 million Saudis in artificial intelligence. Registrations open.
Massive ambition. Ties right into their Vision 2030 goals. Big government push involving multiple ministries.
And it's open to everyone. Men, women, all ages. Covering AI skills, applications, ethics, practical training.
The goal seems to be really embedding AI into business and daily life, positioning Saudi Arabia as a tech leader.
They launched it officially back in September 23 at that Global AI Summit. Shows how serious they are.
It's a major investment in people and tech for the kingdom. Very significant.
Okay, finally, let's circle back to that fear and greed index. It's at 67, greed.
Yeah.
How did that sentiment potentially play out for prices?
Well, greed usually means optimism, more buying. It can fuel rallies for sure.
But?
Oh.
There's always a but, isn't there?
Yeah. High greed can also mean the market's getting overheated. Could signal a correction is coming as people take profits.
So bullish short term maybe, but watch out for things getting too frothy.
Exactly. Extreme greed can be a warning sign. Doesn't guarantee a crash, mind you. Could just mean the rally continues strong for a while.
But it's just one indicator.
It's just one piece. You've got to watch everything else too. Geopolitics, for example. Our source briefly mentioned that escalating situation between India and Pakistan as the kind of external factor that could impact markets. Just an example, obviously not taking sides.
Right, lots of moving parts. So, quick recap. FOMC held rates, markets ticked up slightly, DeFi volume surged, but TVL lagged. Tether's pushing compliant tokenization hard with Hadron.
Revolut adopted Lightning, Middle East is buzzing with Web3 in Dubai and that massive AI training program in Saudi Arabia.
And market sentiment is greedy, which needs careful reading.
It really paints a picture of rapid evolution, institutions getting more interested in tokenization, payment tech improving, whole regions leaning into this stuff.
So here's something for you, the listener, to think about. With institutions eyeing tokenization and payment tech like lightning advancing, how might those two forces really change finance down the road? And what role will individuals like you play in that new landscape?
It's definitely food for thought. Keep exploring, keep questioning.